Good morning, everyone. This is Tara Sewell, internal wholesaler with Financial Markets. Thank you for joining us today. Your lines are muted, but if you have questions, please reach out to your internal wholesaler after the call. Our winner today will have a choice of a gas fire pit or an American-made Cordova Cooler. Also today, Neil Sperling, Vice President of Financial Markets, will be discussing why now is the right time for fixed annuities. But first, from all of us here at Financial Markets and the carriers you sell each and every day, thank you. All of you play a critical role in ensuring that clients continue to have access to the protection and opportunity that life insurance and annuities provide. Thank you to all the producers on the call. Together, we protect families and their financial futures. Congratulations to Ruby. She was the winner of our March Madness drawing, and congratulations to our runners-up. Let's dive into the details for our summer giveaway today. So for every application you submitted between April 8th and July 8th, you received one ticket for every application submitted, one ticket for every $10,000 in anticipated annuity premium, and one ticket for every $1,000 in anticipated life, MedSup, DI, or long-term care premium. Now, you received double tickets for applications that were submitted to our premier carriers, and triple tickets were given if the case was placed by July 8th. And today, one producer will win their choice of a gas fire pit or the Cordova Cooler. Today, the odds are in your favor. 6,555 tickets in the hat. Now, the hat has been shuffling all morning, but your name can only be drawn once, and you must be pre-registered with your full name and on the call for the duration of the webinar. Now, let's get started with our first finalist. So I have our hat shuffling here, and let's drop them into the hat for our first finalist. Stephen Hoffman with 72 tickets in the hat. Neil, is Stephen on the call?
Let me take a look here, Tara. And Stephen Hoffman is on the call with 72 tickets. Congratulations.
All right. There are many great tools and resources available to you on our website, fmiAgent.com. WinFlex Web is one of those tools. Now, our internal wholesalers have been using WinFlex Web for many years to design and generate NAIC-compliant illustrations. Now, producers have access to WinFlex Web through our Financial Markets website and all the top carriers. You can find WinFlex Web under Agent Tools, Quotes, and WinFlex Web. Check it out the next time you're on fmiAgent.com. Now to our second finalist. First, we have Stephen Hoffman, and our second finalist, Todd Adrian with 88 tickets. Is Todd on the call?
Let me take a look, Tara. And Todd is not on the call.
All right, folks, we have to be on the call in order to qualify. So far we have Stephen Hoffman, and we are looking for our second finalist. Angie Ford with 137 tickets. Is Angie on today's call?
We'll take a look. Tara, Angie is on the call.
All right, congratulations. You can subscribe to Financial Markets YouTube channel. You'll find us at youtube.com/fmiAgent. On our channel, you will find webinar replays, sales concepts, case studies, Dow's Weekly Digest by our very own Ed Bartling, and watch for a new season of Brighter Summer Days starting next week. And don't forget, hit subscribe. Let's draw our third finalist. Nathan Messer with 10 tickets in the hat. Is Nathan on the call?
Tara, I think this can be a record. We got 3 out of 4 right away. Nathan Messer is on the call with us.
Congratulations, Nathan. Now is the time, and we're excited to share with you why now is the time for fixed annuities. Vice President of Financial Markets, Neil Sperling.
Thank you, Tara. Get this queued up here. All right. Thank you, Tara, and thank you to all the producers on the call with us today. As we meet together here today, there's quite a bit of uncertainty in the world. Listening to the news, they talk about food shortages, wars, inflation, the border crisis, and tension between political parties. One of the things they don't talk about as often is how amazing this great country is. The United States is still the best country on earth to have the privilege to live in. Along with that privilege, we enjoy incredible American ingenuity. While annuities have been around since the time of the Roman Empire, the U.S. annuity industry has been rapidly improving and enhancing what annuities can do in one's portfolio. Today, I hope to show you why now is the time for fixed annuities. I see a lot of names that are on the call today that sell a tremendous volume in annuities. However, there's a good amount of disability income and life insurance focused producers on the call that have not sold an annuity in the past. Some of this content may be a repeat for some of you, but will be new for others. So what is a fixed annuity? A fixed annuity is an insurance contract that guarantees the buyer a rate of return on their contributions for a specific period of time. The two main types of fixed annuities are deferred declared rate and deferred index linked. A declared rate annuity normally offers a declared interest rate guaranteed for 1 or more years. Declared rate annuities provide a relatively conservative rate of return for very little risk. The other type, an index linked annuity, or also known as a fixed index annuity, still provides the buyer a guaranteed rate of return for a specific time period, but also offers the ability for the annuity to earn credits based on the performance of an outside index. The last and likely the oldest type of fixed annuity is an income annuity. This includes single premium immediate annuities and deferred income annuities. While income annuities play an important role in financial planning, we will focus on the two main deferred fixed annuities and declared rate and index linked annuities here today. First, a comment I hear somewhat often is I can't sell annuities because because I don't have a securities license. That is really not the case for fixed annuities. If you are an advisor holding a securities license, you can only sell annuities if you also hold an insurance license. Then, as a securities license advisor, you may be limited to the products that you can sell. For those of you on the call with a securities license, you likely know you'll need to consult with your compliance department to see what is available for you to solicit in the annuity arena. For those of you on the call that hold an insurance license and not a securities license, you can sell nearly all of the fixed annuity products we offer. Again, if you are an insurance-only licensed producer, you can sell fixed annuities, including index-linked annuities. If you've not looked at these financial tools for your clients in the past, I believe now is the time to do so. So what do I need to have in place to be compliant to sell fixed annuities? These requirements are quite similar to the requirements for those with a securities license, but we will just address the requirements for insurance-only licensed producers. First, you need a life insurance license. There are a couple of states that have an annuity line of authority separate from the life insurance line of authority, but the majority of states include fixed annuities as a product covered by the life insurance line of authority. Most states have enacted specific continuing education which producers must complete before selling fixed annuities. Of course, since fixed annuities bear cash value, you'll need to be current with your federal anti-money laundering training and also carry adequate errors and omissions coverage. Once you have these in place and have a prospect, talk to your internal wholesaler here at Financial Markets to find the product that best suits the needs of your prospect. Once the product has been determined, you will complete a short product-specific training for the individual product or products you will be soliciting. Once that training is on file, you're free to solicit these products to your prospects. While this may seem like a lot of steps, it's rather easy after you've completed the state-required annuity training. Now that we understand what we need to have in place to solicit fixed annuities, what is in it for me, the producer? Here's an example of a sale and the potential commissions. The average size of an annuity sold through financial markets in 2022 as of yesterday is $97,500. So for this example, we have $100,000 placed into an annuity. The producer commission typically ranges from 2 to 7% one-time commission. The commission rate is based on several factors, but the main factors are the age of the buyer and the duration of the annuity. Let's say you sell one annuity per month, and let's assume a middle-of-the-road commission rate of 5%, and you sell an average of $100,000 for each case, which is our average. That's an additional $60,000 of income to you over the year. That certainly makes it worthwhile to mention fixed annuities to your clients. Also, instead of a one-time commission, most carriers offer a levelized commission that will pay annually over the course of the annuity. But I won't go into full detail on that today. Okay, so we've concluded that nearly everyone on the call today is able to sell fixed annuities. Now, where do they fit? I would say that really depends on a lot of factors of the individual client, but let's look at one asset class where annuities may be very useful. You've heard the term cash on the sidelines. This chart shows, as of May 31st this year, there's nearly $5 trillion in U.S. dollars sitting in money market accounts today. While a good majority of those dollars are institutional, there are a fair amount of individual investors with investable money in CDs, savings accounts, and money market accounts, making a very low rate of return. What if we could show them a higher rate of return with relative safety of principal? Would they be interested in making 2 or 3 or even 10 times more interest than they're currently earning? Producers that are talking about annuities with their clients are definitely finding they are showing interest. Okay, so we've identified what it takes for you to be compliant to sell a fixed annuity, looked at some potential commission opportunities, and all the investable cash sitting out there. What options are there in fixed annuities? One of the simplest fixed annuities are declared rate contracts, or MYGAs, standing for multi-year guarantee annuities. While there are distinct differences, MYGA annuities could be explained most simply that they're much like a CD at the bank. There is a declared interest rate for a specified term, and at the end of the term, you can take your money out or renew it for a new term. These are normally offered in durations from 2 to 10 years. Generally, the longer the duration, the higher the interest rate. Here are some examples of rates from July 13th, yesterday. On our website at fmiAgent.com, you have an interactive annuity system allowing you to search for and sort the available multi-year guarantee annuities and their current interest rates. As of yesterday, in this chart that shows annuities from 3 years to 6 years, a buyer could elect a 3-year rate lock at a guaranteed rate of 3.8% annually for those 3 years. Or they could go a little longer with a 5-year rate lock at 4.25%. And wow, 4.25% and guaranteed to be no lower or higher than 4.25% each year for 5 years. At the end of the 5 years, the client can liquidate, transfer out, or renew for a new 5-year period. For your clients holding CDs at the bank paying likely less than 1%, would they be pleased to lock in 4.25% for 5 years? The problem is that many consumers do not know these products exist. It's worth you mentioning to them what a great opportunity this may be for those investable assets. And, unlike most CDs, most of our annuities offer, at minimum, penalty-free access to the interest earned, and even many offer penalty-free withdrawal access of up to 10% of the account value each year. You likely heard the news yesterday that annual inflation hit 9.1% as of June for the United States. While we do not know where these numbers will go, and hopefully this decreases in the near term, inflation is here. Those monies sitting in CDs, savings, and money market accounts, they need a rescue. Those accounts are going backwards in purchasing power. At least get some better interest from those safe assets by considering a fixed annuity. While inflation will likely not continue at these high rates forever, maybe your client would like a higher return than a MYGA, an MYGA annuity that we just looked at. Considering the staggering inflation, what if you had a product that would provide an 8% premium bonus? So if the client placed $100,000 in this product, its value and earning value would be $108,000 from day one. And the account may grow depending upon the performance of an outside index. But if the index loses value, the product loses no value, including no loss of prior earnings from index performance. Also to mention, some things we don't really talk about enough, by current IRS rules, this product is tax deferred, meaning for non-qualified monies, the client does not pay tax on the earnings until those earnings are actually taken out by the client. And when death occurs, if the money is still in the product when that happens, the proceeds will go directly to the named beneficiaries, completely avoiding the probate process. This is applicable to all individually owned fixed annuities. That part aside, this slide describes just one of the many products we have available to you in our portfolio. This description is that other type of fixed annuity we mentioned in the beginning of the call, the fixed index linked, also known as a fixed index annuity or FIA. With an FIA, rather than the company providing a stated guaranteed fixed rate, they provide a 0% floor or some other nominal minimum guarantee with the ability to have earnings based on an outside index. Money placed in an index-linked annuity is held in the general account of the issuing insurance company and is not directly invested in outside indexes. The insurance company uses their general account returns to buy options on the outside index to support the potential returns back to the index-linked annuity. Further, the buyer does not lose principal or prior credited interest if the outside index goes down. FIAs are offered in durations normally from 5 years on up. The most commonly sold durations we see here at Financial Markets are 7-year and 10-year durations. But why would an annuity buyer give up the opportunity we saw on the previous slide of a 4.25% guarantee rate for an index annuity? The reason is pretty simple. FIAs provide an annuity buyer the potential to earn substantially more than what was declared in the declared rate annuity. Maybe that would help your clients potentially keep up with or exceed the inflation risk. And there's still a 0% floor if the index does not perform. Now, we said the inflation rate hit 9.1% last month. How can we remedy that, which has already happened? Some FIAs offer a premium enhancement or bonus. We'll take a look at one of those. Here is an excerpt from an illustration of a fixed index annuity that has a 10-year initial surrender charge period. While I mentioned the various durations of the available FIAs earlier, those durations simply refer to the duration where the company will impose a surrender charge if the client takes more than the annual penalty-free amount or they surrender the annuity. The client can keep it as long as they want after the initial stated duration to the maximum maturity date, which on this particular product is age 95. This page shows the minimum guaranteed values. Let's zoom in. Here we see the annuity buyer put $100,000 in, and the company matched it with an 8% bonus, which of course is $8,000 in this case. So now let's look at the worst case scenario. This is the guaranteed annuity contract values page. This is the minimum the product must perform at contractually. The first column is the accumulation value. This is the amount of money available for index crediting. You will notice the death benefit column to the right. There are no charges or penalties upon death. The death benefit will always match the accumulation value. The second column is the minimum guaranteed contract value. It's interesting that the minimum guaranteed contract value may be less than the next column, which is called the cash surrender value. The minimum guaranteed contract value is the minimum contract value allowed by the state insurance department non-forfeiture rules. The cash surrender value is the minimum surrender value based on the contract language. The annuity contract itself in this particular product is superior to the state's minimum requirement. Therefore, the annuity buyer must receive at least the better of the minimum guaranteed contract value or the contractual cash surrender value. In this case, the client would receive the cash surrender value should they decide to surrender the contract. But again, this is just the guaranteed page of the illustration. This assumes the contract never credited returns at all based on the outside selected index. So what is the potential performance? This page is found in some manner in nearly all fixed index annuity illustrations. We call it the most recent, best, and worst. What it shows us is if this annuity were available for sale 20 years ago with the same participation rates as are offered today, with the same outside index options that are available today, what the annuity would have returned over 3 select 10-year periods out of the past 20 years. The first set of results show the most recent 10-year period ending December 31st of 21. Here we see the year-by-year returns. Had this product been available in its current form 10 years ago, purchased December 31st of 2011, this client would have experienced a 7.97% geometric mean interest rate return. What a word. A geometric mean interest rate is also referred to as a compounded annual growth rate. It's more accurate on a measure of returns. If we were to simply take the average of the annual returns, the result of this set of numbers would be 8.28%. So I appreciate how the illustrations are presented in the more conservative interpretation. So now let's look at the best 10 out of the past 20. The result shows a compound annual growth rate of 8.95%. That sure is a nice return with a 0% floor and no upfront or annual fees. You can see 1 year resulted in returns as low as 1.73%, and another as high as 22.55%. However, what we do not see are negative numbers. So what was the worst 10-year period of the past 20 years? Still impressive in my opinion at 5.21%. And you may wonder, why are there no zeros in this worst case scenario? So we selected 3 different indices to base the index returns on, and of those we placed half of the money in a 1-year crediting bucket and the other half of the money in 2-year crediting buckets. This is just really a result of diversity in allocations, and your internal wholesaler will help you decide what's best for your client, and they really welcome your call to discuss that. Here is a ledger illustration showing the results of the most recent 10-year period, repeated each 10 years. There are a lot of numbers here, but you can see that at the end of the first 10-year period, that initial $100,000 had grown to a potential $232,000, all with a 0% annual floor. Do you have clients and prospects that may want to know about these conservative but rewarding options for their hard-earned savings? What an incredible product, from 5.21% potential all the way up to 8.95%. Wow. Today, I hope we have shown why now is the time for fixed annuities. Please contact your internal wholesaler here at Financial Markets and request a copy of the sample illustration shown here today. Also, hit our website at fmiAgent.com to see more of what these products can do in your client portfolios. Thank you for your business, thank you for your time, and good luck in the drawing. And with that, I'll turn it back to Tara Sewell in just a moment.
Thank you, Neil. What I have found recently with the 10-year U.S. Treasury yields on the rise, we're seeing participation rates in the indexed annuities. They continue to steadily increase, making them even more attractive. So please call us anytime and let us be a resource for you to include fixed indexed annuities and fixed annuities in your practice. Dina, Jason, and I enjoy finding the right annuity product to meet the specific needs of your clients. Remember, we're here to help. Let's draw our fourth finalist for the fire pit or the cooler. Now, as a recap, we have 3 finalists so far, Stephen Hoffman, Angie Ford, and Nathan Messer, and we are looking for our 4th finalist, Cleo Kammerer, with 525 tickets. Is Cleo on the call?
Looking here, Tara. And Cleo is on the call.
Congratulations, Cleo. And now to draw our last finalist. Now, Cleo is drawn again. Well, you can only be drawn once, so we're going to draw again. We're looking for our 5th finalist, Rodney Golson, with 19 tickets in the hat. Is Rodney on the call?
Let's take a look here. Tara, Rodney is not on the call.
Okay. We will draw again. Looking for our 5th finalist, Kelly Potter, with 16 tickets. Is Kelly on the call?
Well, we're in a dry streak here. Kelly's not on the call there.
Okay. Well, we'll keep trying for our 5th finalist, Mark Thiel, with 19 tickets. Is Mark on the call?
Mark is, I didn't see him. No, he's not on the call.
Okay, so let's just refresh our memory. We have Steve Hoffman, Angie Ford, Nathan Messer, and Cleo Kammerer. We are still looking for our 5th finalist, Cliff Cross, with 116 tickets. Is Cliff on the call?
Let me take a look here. Cliff is on the call.
Congratulations, Cliff. So our finalists include Stephen Hoffman, Angie Ford, Nathan Messer, Cleo Kammerer, and Cliff Cross.
So we'll let Tara shuffle that 5-person list, and congratulations for those finalists. Folks, we had such a great time on the annual FMI Agent Point Awards trip at the beginning of June. Many of you on the call earned the trip and joined us at the Lagomar Beach Resort and Club in Fort Lauderdale, Florida. The weather was great, and the fellowship was even better. We look forward to another unforgettable trip next year with the 2022 FMI Agent Point Awards. For as little as $30,000 of life premium or $1 million of annuity premium or any combination thereof, you could find yourself on our 2022 FMI Agent Point Awards for you and a guest. Due to COVID uncertainty, we have not yet announced the location of the trip, but an announcement will be made in September. We have some great venues selected, and I can assure you this will be an awesome trip. The qualification is very attainable, and we look forward to helping you get qualified. Good luck to our 5 finalists.
Thank you, Neil. So we have our hat updated and shuffling, and we are ready to draw our finalist for the fire pit or the Cordova Cooler. Let's drop those names in our hat. And here's our drum roll for our finalist, Angie Ford. Congratulations, Angie. You will have your choice of a patio fire pit or a Cordova Cooler. And congratulations to our 4 runners-up on winning a $50 Amazon gift card. Our next promotion will be starting soon, so watch your inbox for details. Thank you for your time today, and thank you for your partnership and your loyalty. Have a beautiful day.
Thank you for your business, everyone.